Well, China continues to power ahead after data show the economy expanded 8.9% in the third quarter. But is it time to worry about asset bubbles? Joining us now with some analysis is Enzio von Pfeil, CEO, economicclock.com. Enzio, first of all, I know you're a big skeptic. You don't trust those numbers.
Heaven help us if one of them were to be correct, Christine. The simple fact is that the numbers, how can you release GDP 22 days after the end of the quarter? Not even the Americans, with the powerful economy that they have, can do this. So I'm a little bit skeptical just about the quality of the numbers. Having said that, the trend is fine. The trend is reasonably all right.
And what exactly is this trend? How do we measure this trend? If there's this urge to keep those numbers above 8%, above 9%, I mean, the urge is to spend, spend, spend. How do we know for sure the economy hasn't reached a bubble stage?
Well, I don't think that the urge is just to spend. I think that the real urge is to reach that 8%, whether phony or real, to make sure that those 100 million jobs are created each year. I, for one, am not so concerned about a bubble being built, just because a lot of this bubble is being financed out of savings, not out of mortgages as we had in the US. So I think that the urge is not to splurge, but the urge is to hit a growth target of 8%.
Enzio, it's Brian Shackman here in the States. I asked this question of Lorene Tan of the Standard & Poor's, and I kind of want to ask it of you as well. Compare the domestic growth to the exporter side of it, and how much is the emerging domestic economy part of the story in China?
The emerging domestic economy is a very strong part of the story. In fact, we're seeing more domestic demand come through at the expense of less exports in terms of growth impetus. Having said that, retail sales are not, repeat, not to be confused with private consumption. Retail sales include what the government is buying and selling to retailers, not only what retailers are selling to the end consumer. But having said all of that, I would suggest that you are seeing some tilt, a little bit more domestic sales off the back of a strong housing starts, less exports in terms of growth impetus.
Enzio, hi, it's Louisa in London. The PBOC's vice governor was just saying here earlier this week that he was concerned about the rise of capital inflows into China, potentially creating some instability which could lead to local inflation. It strikes me, especially also looking at Brazil now raising taxes on foreign investment, that we're looking suddenly at capital inflows becoming a non-beneficiary. Should we be seeing it this way?
I think that the capital inflows are a sign of people's faith in markets in China, and I think that what we'll find is probably more capital inflows coming through the longer that they try and keep a lid on the renminbi itself. But I would also argue that what's coming in the front of the barn is leaving the back of the barn, namely we're seeing this in Hong Kong, where a lot of money is also flowing out, for instance, into our pollution-infected property market here in Hong Kong. So it's not just a one-way street.
Enzio, thank you very much. Enzio von Pfeil, the CEO of economicclock.com.